Good morning, students. Today in this lecture, as we have already solved our chapter number 4 and 5, that is journal and accounting equation, we have aware about the journal. We are passing journal entries for each and every transaction, which are economic transactions. In this lecture, we are going to talk about some limitations of journal. So the topic for today is limitation of journal. Which are the limitations of journal? The first one is, while recording every transaction, the account name is to be mentioned. That is what, each and every time when we are recording a particular transaction, we need to write all affected account related to the transaction. Suppose purchase account, cash account, we are writing. Next transaction, again suppose cash account is affected, we are writing that cash account. In another transaction, again purchase account is affected, we are writing purchase account. Okay, so each and every time with the new transaction, if any old account is affected, we have to write it again, which we have already mentioned in our journal. But for each and every transaction, we have to mention the name of those two accounts, at least two accounts, two or more accounts. We very well know each and every transaction is affecting at least two accounts. So this thing, that for each and every transaction, the name of account is to be written, though it is repeated. Second, repetitive journalizing and posting. Suppose we are doing a transaction with a particular item. Say for example, we are buying goods from Mr. X. So the number of times we will be buying goods from him during the month or during a week or during the year, we will have to write the journal entry. Okay, suppose Mr. X, we are on first date we are buying goods from Mr. X, on 7th date we are buying goods from Mr. X, on 10th date we are buying goods from Mr. X. So with every transaction we will have to pass a separate entry. Okay, right? So second limitation is this. Now posting, the number of time we will pass journal entry, the same number of time we will have to do the posting also, right? And posting will be done in two different pages because at least two accounts are affected, and posting will be done to the two different accounts. What else? Bulky and voluminous and becomes difficult to manage. What? Journal. See, each and every transaction is recorded in journal, whether it is a cash transaction, it is a credit transaction, it is a transaction of purchase, it is a transaction of sales, it is a transaction of income, expense, liability, asset, any transaction, purchase of goods, purchase of assets, sale of goods, sale of assets, any such transactions are recorded in journal. So the thickness, the size of journal becomes big, right? So it becomes difficult to manage it. And in a big business where number of transactions taking place are more day by day, every day, the thickness of journal becomes very big. That means the book becomes very large and it becomes difficult to manage the book. What else? Does not provide information on prompt basis. Prompt basis means at a glance, at a short period, if you want to know the status of any particular thing, suppose at a particular of time, on particular date you want to know your credit purchase till that date, you won't be able to know from journal. You will be able to know, but not at prompt basis. Means immediately answer you will not get for your question. You will have to go through the entire pages of journal and then you will be finding how much purchase you have. Okay, so prompt information on prompt basis is not that easy when we continue with the journal book. What else? Difficult to implement effective control system. See, control is possible if you are always ready with the press records, right? And you are having your net balances, maybe it is of goods or cash or anything. When you are having the recorded facts, you are having the fresh balances of facts, then only you may have the control. So effective control becomes a tedious one when you are maintaining journal. So these are few limitations of journal. No doubt journal is very useful, it's too useful for everyone, those who are dealing in accounts, right? But some limitations are there, and these limitations, to overcome these limitations, we subdivide the journal. We do the subdivision of journal. Okay, no doubt nowadays computers are popular. Because of use of computer, these limitations are neutralized. Now, if you are maintaining journal only, then also these limitations you can avoid, because you are making use of computer and computers are smartly working. Within a quick click, you can get information about the thing what you are looking for, right? But earlier, when computers were not popular that time, and today also, this subdivision of journal is popular, right? So subdivision of journal is known as subsidiary book. What it is? Known as subsidiary book, which is our chapter number 6. So actually in this lecture we are going to start with the new chapter, which is the chapter number 6, which is subsidiary book. Subsidiary book is what? It is a subdivision of journal. But without, if we know the limitation of journal, then we can know the benefit of subdivision of journal. Let's have a look of meaning of subsidiary book. So today's topic, chapter number 6, today's chapter, subsidiary books. For large number of transactions, which are repetitive, separate book of journal is kept. The transactions. Which transactions are repeated most? Purchase. Again and again we are purchasing goods from our supplier. Sales. Again and again we are selling goods to our supplier, our customers. Expenses. Income. Right? There are many transactions which are repetitive in nature. They are happening again and again in a business organization. Here are some examples. Suppose in subsidiary book, a separate book is kept for such transactions which are repetitive in nature. Say for example, a separate book will be kept for cash transaction, a separate book will be kept for credit purchase, a separate book will be kept for credit sales, right? So different books, separate books we can keep for a repetitive transaction of similar nature, right? So those such books are known as subsidiary book. Now we will see the meaning of subsidiary book in an organized way. Subsidiary book refers to the journal. Subsidiary book refers to the journal. It is also a journal, but journal which is kept for specific transaction. Which is kept for specific transaction. So subsidiary books refers to the journal which is kept for specific transaction is known as, it is subsidiary book. It is also known as day book. What is the other name of subsidiary book? Day book. Let us talk about some subsidiary book which we may have, which we will see in our chapter, like purchase book. Purchase book will be a book to record credit purchase of goods. Sales book will be a book to record credit sales of goods. Purchase return book to record transaction of purchase return. Sales return book to record transactions of sales return. One book we will learn in next chapter, that will be a cash book to record all cash and cash transaction, whether income, whether expenses, whether capital income, capital expenses, sale of assets, sale of purchase of asset, anything, any cash transaction. So these will be some books which are affecting, which we are going to learn in this chapter. In detail about the books we will be learning in next video. Thank you.